you as the former CEO of a video gaming company Atari and now the CEO of crypto blockchain industries. And today we're talking about really whether or not cryptocurrencies are on the cusp of going mainstream. So without further ado, I'm going to jump in and I'm going to go to you, Fred. So at Atari, you sort of successfully leveraged blockchain and cryptocurrencies to revive the company. And now you're in a role where you're sort of making investments in other industries. So do you see that cryptocurrency is sort of poised to go mainstream? What's your perspective on that?
Good afternoon. Thanks for having me. I believe, yes, that this is the trend. I mean, today, cryptos are not mainstream yet. I can see, because I'm quite involved in the space on a daily basis, there's still, even for those who are involved, some technical difficulties. Some people would just believe they get it, but in reality, when it comes to moving or doing some transactions on the blockchain, it's a bit more difficult. And at the same time, today, you don't have we're still, I would say, minority. So this is definitely the trend, but we are not there yet. I think it's, for me, the short answer to this question. I think it's just going to go more and more and more mainstream, but we're not there yet, especially, in the Western world. Why do I need Ethereum to buy, some bread or some drinks? I have a bank account, I have cash. It's not the same in other countries. I think mainstream would come from countries where you have a lot of people who today do not have and will never have access to bank accounts.
Mm-hmm. And so, at Atari, could you talk us through a little bit about, you saw an opportunity there, but is it the case in your view that, for every sector, the opportunities aren't the same? And what do you think is the difference, say, for video gaming versus the banking sector, for example?
At the end of the day, I think it's pretty much the same. If you look at the history of video games, it's still a very young industry. Every time there's been a change of platforms, moving on from PlayStation 1 to PlayStation 2, from Xbox 2 to wherever, 360, every time there's been a change of platform, you've seen the cards being reshuffled, meaning you've seen the emergence of new franchises, new companies that did not exist during the previous cycle. So I believe for us, in the video game space, blockchain is another platform. So it's really an opportunity to disrupt the existing order, so we say, of franchises and come up with new games, new types of gameplay, new experiences that can change, the business order. Think CryptoKitty, for instance, or Axis. At the same time, and if you just take a step back, I believe this is also the same for industries that are not used to such frequent changes, right? I mean, the music industry came from the vinyl and then just to digital. But if you look at the banking system, there has never been a change of platform, so to say. I think this is a change of platform for this industry. I believe that you're going to see, and you're already seeing, significant changes in the banking industry, for instance.
And what do you think, when you were thinking about how to leverage the technology for Atari, what did you perceive the risks to be in? You mentioned earlier there are still sort of some technological barriers. What do you think for other sectors the risks, continue to be?
Well, there's always, when there's a change of platform, when there's such significant, transformation, there's always a risk. I would say it's not only a risk of moving forward and moving on to the new platform, it's also the risk of staying on an old platform, because if you see the competition moving forward and adapting, embracing blockchain, and you've not done it, maybe you're going to be dead in the very short term, if not maybe medium term. So there's always risk. There always, rely or depend on the type of business you're running. For video games, it was pretty simple, because for us, managing currencies, in-game currencies, is part of our business, right? Every time we sell a game, we always have an in-game currency for microtransactions. They are not on the blockchain, so that's a big difference, right? With blockchain, now you have more value if you play on the blockchain than if you play a traditional video game. But I would say for us, the steps and the leap was not that big, because that was already part of our DNA to have these in-game transactions. I believe that for other industries, insurance, banking, transportation, I think the leaps will be much, much bigger. But I believe that they have to, if not do it entirely, meaning you don't want to put your business, transition your business overnight on the blockchain, because first, you're not sure that this is going to be adopted and followed right away by your clients. But I think you just cannot ignore it. It's just impossible to ignore crypto, blockchain, or especially, look, I'm just going to give you a very simple example. I trade stocks. I don't think it should take 3 days for the share I have bought to move from the seller's account to my account. Why 3 days? It's impossible. I mean, it's possible, of course, but I'm not saying it's not acceptable. It should be much, much, much quicker. It should be instant, basically. I mean, 1 minute, 2 minutes. So I think you're going to see a lot of changes.
Mm. And do you believe that there is still a stigma attached, or any stigma rather attached to cryptocurrencies when you speak with executives? Is that sort of, do they perceive also reputational risks associated with cryptocurrencies?
I think people tend to make to put together in one same bag crypto and blockchain. The most important thing is blockchain. This is the technology. Cryptos are just the tokens that you use to execute contracts on the blockchain, right? And I think it's true that tokens, you've seen everything. Look, you have tokens going from 1 to 1,000, from 1,000 to 5 in very, very short time. You've seen scams. I believe that as a shareholder and as a manager, you should look into blockchain and look at cryptos based on their effective use, the use cases that you can have with them. But the most important thing is blockchain. Crypto is just the necessary gas, the tokens that we need to work on the blockchain. The most important for me is the blockchain technology.
Mm-hmm. Chris, let me turn to you. We've just been mentioning a little bit about the banking and insurance industry. Some people might argue it would be, finance would be sort of a natural home for cryptocurrencies. Yet, arguably, you can see there is still some reluctance on that front. Where do the regulators fit into this picture?
So the regulators have a large role to play. And actually, I want to jump back to your very first question, Michelle. You said, has crypto gone mainstream? I love that question because it really depends on who you are in the social spectrum. If you're 35 and under, crypto is already mainstream. Blockchain is already mainstream. And I love being here with Fred because it all began with video gaming. That's how young people came upon this. That's why they intuitively understand crypto, whether it's trading avatars and tokens in video games or having direct peer-to-peer communications with other players in games. They understand this landscape. It's the 35 and older crowd who really are, it's a mixed bag as to whether it's mainstream for them or not. And I put regulators in that case. Our regulatory agencies are mostly headed by people in an older generation. And there's a great author, Doug Adams, who wrote The Hitchhiker's Guide to the Galaxy, one of my favorite books. And he says, the world you're born into is the one you take for granted. But the things that come about before you hit age 35 are new and exciting and are to be explored as a career opportunity. But things that come about after you're 35 are suspect and need to be repressed. And I think to some degree, we're in that repression stage, First they ignore you, then they attack you, and later they adopt you. And I think we're in the attack stage to some degree, the regulatory response. And for me, it's actually quite disappointing here in the United States. The United States is the public sectors, the official sector's first response to the first wave of the Internet of Information back in the 1990s, was a bipartisan call for a do no harm response. This time around, at least in the present environment, the official sector's response, at least here in the United States, seems to be first preserve the incumbents, first preserve the status quo. And I really think that's a disappointing and unfortunate response. Why is that? Because our financial sector infrastructure that was state-of-the-art in the 20th century has sadly fallen behind the times, and it's actually quite true here in the United States. Fred mentions the 3-day settlement period for securities transactions. Well, where does that 3-day period come from? It comes from 3-day delivery of first-class mail. Once upon a time, the securities settlement system relied on the mail system to deliver securities. Well, mail has gone 24/7, 365. In fact, we don't use the Postal Service for most of our communications. We use the internet, and we can get information around the world in a nanosecond. And yet we still have 2- and 3-day settlement cycles for many of our financial transactions. It takes 3 days to cash a check, and yet it takes a second to move a photograph or a JPEG photo or a video around the world. And so the financial system is lagging the technology. The financial system is lagging a new social revolution in our expectations for communications and delivery of value. And so this technology has the potential to revolutionize our financial system, make it more inclusive, lower cost, much faster, and with less rent-seeking behavior. And so I've been calling for a regulatory response that recognizes the challenges, but also seeks to capitalize on the opportunities of this new technology. And unfortunately, I think the regulatory, the mode of the official sector here in the United States seems to be more resisting than it is embracing. And I think we can do better. We have done better in the past. I think we'll do better in the future.
The arguments from some of the regulators is the fear over systemic risk, as well as sort of fraud and so on and so forth. I think arguably the systemic risk question is maybe the bigger one. Do you believe those fears are overblown?
Well, so, actually, I lived through that myself as chairman of the CFTC in 2017, when we took up the decision as to whether to greenlight the launch of Bitcoin futures. Those same fears, that same resistance was voiced by fellow regulators here in the United States, fellow regulators around the world, members of industry, and in fact, the press itself. Questioned what we were doing, but we went forward anyway. We took the right precautions. We did our homework. We did the research. We put the processes in place to recognize the challenges. Yet we put a firm regulatory structure in place to guard against that. And guess what? Bitcoin futures has worked brilliantly. It's created a new market. We wouldn't have a $3 trillion value in crypto today, but for the CFTC's greenlighting of Bitcoin futures and eventually Ethereum futures, creating the world's first regulated, deep, liquid, and transparent market for derivatives on crypto, which has allowed institutional participants to move into a regulated market in a safe and well-functioning way. So, regulators have to have a degree of courage. They have to do their job. But they can't let fear and uncertainty guide their regulatory response. They have to have a degree of, okay, we can do this. There are challenges here. There are law enforcement needs here. But we can do this if we have the right degree of courage. We need to embrace the future. We're way too, the regulatory state cannot be one of constant fear. It has to be a balanced response to new innovation. Regulators actually do not have the authority to say, we like the world the way it is, and no further change is needed. We're going to keep it the way it is. Regulators have to embrace change, but do it in a thoughtful, intelligent, cautious, but forward-leaning way.
So speaking of embracing the future, I'd like to turn back to Fred and speak a little bit about the metaverse. I mean, there are analysts out there arguing that the creation of a successful or successful metaverses will be the turning point for the adoption of cryptocurrencies. I mean, Fred, can you speak to that idea? How important or game-changing do you believe the development of the metaverse will be for cryptocurrencies?
I think it will be important, but I don't think this is the key turning point. For me, first of all, just to make sure in 1 minute, but just to make sure what the difference is between a metaverse and an online world, because online games, persistent world have been here for 20 years. The big difference here with the metaverse is that on top of the game, on top of the world, there is a blockchain layer, and some transactions, not all of them, do happen on the blockchain. So you can transact with other people, you can create assets and you can sell them, which is not the case today. But if I create an asset in a video game or in a mobile game on Apple, I cannot sell it to somebody else. So the big difference is this is a kind of virtual world, but with a blockchain layer, so all transactions are on the blockchain. I believe that this is going to be an important step, but for me, the most important step is not this one. I think we live again back to we are in some developed countries, but today half of the world population does not have access to a bank account and will not have access to a bank account. Why? Because they have no address, they have no ID, they only have a phone. The only way for these people to, and I'm not naive, I'm not saying, oh, tech is going to solve everything, don't get me wrong. The only way for these 4 billion people to have access to a better way of life and be part of the economic system is to have a wallet and to be paid in cryptocurrency. They will never have an Amex. There's no way. They don't meet the requirements. They have no ID, no address. They have a phone, 2 phones, 3 phones. So for me, this is going to come from that tranche of the world population. And I think for them, this is a great opportunity. When you have, on the one hand, blockchain and crypto, and on the other hand, access to worldwide internet with the satellite systems, this is at least the perfect combination for everyone using crypto, everyone on the planet, meaning not us. Again, we don't need crypto, we have bank accounts. We need crypto for other reasons. But this is for me the big move, the most important moment for crypto to become mainstream and adopted. The metaverse is going to help, but the metaverse is for, and you will see these people working in the metaverse, creating avatars, selling avatars. You don't care about $50. In some countries, it's important. If you can make $50 every 2 days, every 3 days, you can make a living. It's just like you write a book. I always tell my wife, look, sometimes you buy a book because you don't know to write it. This is the same for video games. I don't have the time to build my avatar from level 1 to level 20. I go to someone because I want that avatar level 20 to play with my friends who have the time or the expertise to go there. This is the same, just different platform, different so to say experience. But this is not as dumb as writing a book. I'm a little bit biased on that one because I come from the video game space. But you have to really change the way you look at things.
Mm-hmm. This segues quite nicely into the issue of central bank digital currencies. One of the huge arguments for that, Chris, as you know, is financial inclusion. Again, on that issue, are you seeing momentum around the world on central bank digital currencies? Do you expect 2022 to be a pivotal year for CBDCs?
Absolutely, Michelle. I expect within the next decade, every major central bank in the world will roll out a central bank digital currency. And I explained this in my book, Crypto Dad. I think there's 7 drivers why all the major economies, in fact, many of the minor economies, most of the world's central banks will do this in the next 10 years. The first one is data capture. And that's certainly why China has been leading the pack in developing a central bank digital currency, because in a communist system, only the central party can control the economic data that is generated by people's economic activity. And the success of WeChat Pay and Alipay in terms of conducting payments, but also collecting that data, drove China at first to go down the road of a central bank digital currency. But it's not just in communist systems like China. In the West, when Facebook it first said it was going to launch a digital currency called Libra, our governments here in the United States and in Europe took notice, and it was about the data capture issue. The second reason is financial system modernization, and economies like Singapore's and Great Britain's, for example, that are very dependent on financial services, see central bank digital currency as a way of modernizing wholesale payments as well as retail payments. The third reason is financial inclusion, exactly as you said. And look at what the Bahamas are doing with their sand dollar as a means. And Fred talked about this. It's about identity. The bank-based account system is never going to capture the full population of the globe, because out of 8 billion people, 1.5 billion do not have identity and therefore are excluded from the identity required bank-based system. And that's why digital currencies will work for financial inclusion. The fourth reason is monetary policy precision. We learned during the COVID crisis here in the United States that sending paper checks to people that were locked at home and couldn't get to their banks, or worse, didn't have bank accounts, was not a real precise way of delivering relief. The next reason is about stablecoins. The rise of stablecoins has been so successful in moving money around the globe 24/7, 365 days a year, that central banks are worried about losing their longstanding monopoly over wholesale payments. And commercial banks and correspondent banks are concerned about that as well. The sixth reason is geopolitical influence, and certainly China, but also the European Union, believe that a central bank digital currency is a way of elevating their role in reserve currency status. But the most important reason, and I talk about this in my book, that I think we need to be thinking about central bank digital currency is values. Money carries with it values and social values. You know, at the end of World War I, French Premier Georges Clemenceau, looking on the carnage of the war, said, you know, war is too important to be left to the generals. And in my book, Crypto Dad, I coined the phrase, money is too important to be left to the central bankers. And I mean that with no disrespect to Jake Powell and Christine Lagarde, who are good public servants. But the fact of the matter is, we as in free societies need to make sure that the digital money of the future carries the values of free society, values of privacy rights and economic liberty and anti-censorship for legal activities. And I think we all have a stake in the digital money of the future, whether that digital money is operated by Facebook or whether that digital money is operated by the US Federal Reserve or the European Central Bank. We need to make sure that that digital money reflects the social values that in a free society we should take for granted, that our economic liberty, our economic privacy is ours. And so I think we all need to get involved in the development of central bank digital currencies and not just leave it to our central banks to develop it. And there's the importance of values is the most important reason of all to get involved in the issue of central bank digital currency.
Mm-hmm. Fred, let me turn to you. Are you as bullish on central bank digital currencies as Chris? Do you believe that that could be a real game changer for stablecoins, cryptocurrencies? I think you're on mute, Fred. I think you're on mute.
Yeah, I think it's I think it's possible that they play a significant role. At the same time, you should not underestimate the core, belief in the crypto/blockchain space, which is nobody should control the currency. If you look at Bitcoin, no one controls it. Maybe that's why people love it. I think it's going to be more challenging for look at India, right? They are basically banning each and every cryptocurrency, apparently just to create their own, right? I'm not sure that people will believe as much in a cryptocurrency that is run by somebody, but in a cryptocurrency that is not governed by someone. I think at the end of the day, cryptocurrencies who have a fixed limit, who are not controlled by anybody, I think will always have a preference in the eyes and in the hearts and basically in the wallets of the crypto users. But I recognize the challenges and the necessity for some regulators in each country, to set the frame and say, okay, we need it, we want to control it, so let's do it. And you want to take care of your population, and you don't want to have like competition. So I get that, but I think at the end of the day, it's going to be, if it's controlled by one system, by one authority, one regulator, I think that when given the choice, users will more likely go to something that a currency that is not controlled by a central authority, just because it's in the DNA.
And Michelle, I'd love to pick up on that point because I entirely agree with Fred. I think that in a free society, our liberties are best protected if there's a choice of currency. You can imagine a world where you've got a digital currency operated by big technologies and digital currencies operated by governments. And the best environment may be where people have a choice and therefore choose privacy rights as a design feature, whether that's offered by central banks or whether that currency is offered by technology companies. And choice is the best protector of our economic liberty. And monopolies, whether they be government monopolies or private sector monopolies, may be the greatest threat to our economic privacy and liberty. And so therefore, and I talk about this in my book, the best outcome may be a choice between both official sector and private sector offerings of digital money.
Chris, that's great. Thank you so much, guys. I'm afraid that's all we have time for. We're going to have to cut everyone off. Really appreciate your time, and thank you everyone for joining us.
Thank you. Thanks for having us.
Thank you.